Your agent just told you to waive your contingency to be competitive. Before you do that, watch this video. I'm going to explain exactly what you're giving up, what the real risks are, the smart approach most buyers don't know about, because waiving your contingencies blindly can be one of the fastest ways to make a very expensive mistake. My name's Natorie with EQ1 Real Estate, and let's walk you through this carefully. First, let's make sure that you're clear on what each contingency actually does, because most buyers understand them in theory, but not necessarily in practice. The inspection contingency gives you a right to hire a licensed inspector after your offer is accepted. You review the results, you either negotiate the repairs, take a credit, or if the findings are significant enough, just walk away. The appraisal contingency protects you if the home doesn't appraise at or above the purchase price. If your home appraises below your offer, you have an appraisal contingency. You can renegotiate or you could walk away. Without it, you're committing to covering the gap between the appraised value and the purchase price, essentially more money out of your pocket on top of your down payment. The loan contingency protects you if your financing falls through. If your lender ultimately can't fund the loan for any reason, the contingency lets you exit the contract without losing your earnest money deposit. Without it, if your financing fails, you may lose your deposit. These are real protections. Waiving them is a real decision and not just a formality. Let me give you some real life scenarios to make this concrete. For example, an inspection contingency waived. Buyer purchases a home in Campbell. After closing, they discover the foundation has an undisclosed drainage issue. That will cost them essentially $85,000 to remedy. The disclosure package mentions minor settling. The inspector they could have hired could have flagged it. They had no recourse. Appraisal contingency waived. Now, here's another example. Buyer offers $1.9 million on a very competitive home, and it's a very competitive situation. The home appraisal, unfortunately, comes in at $1.72 million. The lender can only fund a loan only up to $1.72 million. Essentially, this is where the buyer must bring in the additional $230,000 in cash on top of their planned down payment, or the deal collapses and they lose their earnest money deposit, which could be very, very expensive. Now, if you waive the loan contingency, what does that mean? Say, for example, the buyer loses their job between offer acceptance and the day they close. Without the loan contingency, they cannot exit the contract. They lose their earnest money deposit, which essentially in this market can be anywhere between $50,000 to $100,000, if not more. I'm not sharing this to scare you. I'm sharing them so you understand what you're actually agreeing to when you sign these waivers. It's real money, and it's essentially a really big risk, not a bureaucratic checkbox. Here's the approach I walk buyers through whenever possible. Luckily, in Silicon Valley, a lot of these reports are done up front. Now, this is very different compared to the rest of the nation. So if you're relocating, pay attention. This is where the sellers put up the TDS, seller disclosures document. They'll have inspection reports. The inspection reports can consist of pest inspection, home inspection, roof inspection. Sometimes if there's a pool inspection. The list goes on and on depending on what type of property. Now, to be thorough, before you submit your offer, I encourage that you actually go through all these reports, and you can even call and ask the inspector clarifying questions. This is how my clients feel much more prepared, feel that they understand the process, they know what they're getting into before they even submit an offer. This gives you the competitiveness of making sure you make an educated decision, and if it makes sense, write a clean offer. Seller loves it because it signals you won't be backing out over the inspection findings because you know exactly what you're getting into beforehand while protecting you. Every home sale in California comes with a disclosure packet. And it's one of the most valuable documents in the process if you know how to read it. The core documents, like we just discussed, consist of the transfer disclosure statement, which essentially is the TDS. The seller is essentially legally required to share the material facts about the property. Is there water intrusion? Is there any unpermitted additions? Is the neighborhood, do they have any nuances that you should know about? Known defects, and much more. The other document that I highly encourage you to review is the seller property questionnaire. It goes deeper. It asks you about specific systems, repairs done, insurance claims, HOA issues, and so much more. Then there's the natural hazard disclosure, which to tell you whether the property's been in a flood zone, fire hazard zone, earthquake fault zone, and other designated areas like if you're near a dam. These matter because insurance can be costly. Also, this is important to know because of what can happen down the line when you go to sell the property. And if there have been permits pulled for additions, remodels, new HVAC system, roof, what have you, those should be documented. Any unpermitted work is a red flag worth understanding before you even commit to the property. Read the disclosure packet carefully, all of it. If something's unclear, ask me. If something's concerning you, we can ask a specialist. This is one of the highest leverage things you can do in the due diligence process. Let me give you a clear framework for thinking about this. Waiving an inspection contingency makes sense when you have your inspection done, you understand the condition of the home, the findings are manageable and within your budget to address, and the competitive situation generally requires it to win. It's reckless when you haven't inspected, you're relying entirely on the seller disclosures, and you are not in the financial position to take on a significant repair that could be essentially catastrophic. That's something we need to pay attention to. Now, waiving an appraisal contingency makes sense when you have a cash reserve to cover the reasonable gap. You've done careful comp analysis so you understand what's going on, the likelihood that it'll be appraised, and you're confident in the offer relative to the market. Now, how is this reckless? When you're stretched to your limit, you haven't run comps, you have no buffer if the appraisal comes back significantly below your offer. Definitely worth reviewing the comps and strategize, and that's what I do with all my clients. It's truly important. Now, let's go over the loan contingency when you waive it. Waiving a loan contingency makes sense when your employment is stable, you have a financial profile that is straightforward, and your pre-approval is solid. It's reckless when your income is variable, your employment situation is here nor there, you don't have really that much confidence, and there are complexities in your financial situation. Maybe a lot of loans, high debt to income ratios. We got to evaluate it, and this is where it's important to strategize, again, to make sure it makes sense for you. You do not want to be stretched super thin. This is a big investment. We need to guard your money to make sure it's the wise investment for you. The goal is never to maximize what you waive. The goal is to be competitive in a specific situation so you're fully aware of what's going on and what you're agreeing to. The contingency decisions are some of the most consequential choices you'll make throughout this process. Make them with an educated understanding and make sure you're fully evaluating everything that's going on. My inspection red flag checklist is in the description. This is the exact list I walk through with every buyer when reviewing a property and its disclosures. If you found this to be useful, hit subscribe. Next week, I'm doing a full breakdown of how to read disclosure packets, including the buyer's most common misses. See you there.